This is Alan Bush with ADMIS with the daily financial forecast for Thursday, February 4th. Starting out with the stock index futures, there was some pressure in the overnight trade. This was linked to lower energy prices. Since then, though, we have come back to trade a little bit better in conjunction now with the recovery gains that we have seen in the energy markets. So crude oil moving from lower this morning to higher, so that's supportive. Also, we did have 4 economic reports this morning coming in on the weak side that temporarily pressured stock indices. But once again, traders ignoring that to some degree, and we are seeing prices higher, as I think analysts and economists now are looking more toward interest rate policies which are likely to remain accommodative globally. Also, over the last couple of days, we have seen several Fed officials backing away from their hawkish rhetoric, so that is supportive. And we also had comments from the European Central Bank president indicating that more accommodation could be on the way. So even though we have seen energy prices weaker as a big negative for the indices for quite some time, I think we are gradually seeing prospects of more accommodation around the world being an offsetting bullish factor that will ultimately dominate and take stock indices higher. Now, moving over to the currencies, the dollar index under pressure for a second day. Of course, we did see a very severe decline in the dollar index as Fed officials indicating that the Fed may be less aggressive as far as raising rates this year. Also, the dollar now very close to some major support areas, so I think the dollar will probably hold in here. Also, even though the Fed may be less aggressive and less hawkish, the Fed still is the most hawkish of the major central banks. So what we'll probably see is the dollar index finding support in this area, and then I think that with the Fed still being the most hawkish of all the major central banks, that we'll see a gradual rise over the course of this year for the dollar against other currencies. Also, we are seeing the euro currency trading higher, even though we did have the European Union slashing its inflation estimate to 0.5% this year. Also, the commodity currencies doing much better. In fact, the Canadian dollar and the Australian advancing, even though in the overnight trade crude oil prices were lower since then, though we have seen extended gains in the commodity currencies as the crude oil market reversed and is higher now. And in the interest rate futures markets, some offsetting influences, energy prices advancing now more recently today, putting some pressure on interest rate markets. The economic reports, though, as we mentioned earlier, coming in very much on the weak side, that being supportive. Also, it now appears that the Fed will not be able to raise interest rates this year, with the probability of a rate increase at the December Federal Open Market Committee meeting now at just 45%. So once again, good trading, everyone. And remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.